What's up, AMC family? It's your boy D, and we back for another video. Hope you had an amazing weekend. I know this has been a long, journey and all that. We're gonna talk about AMC and Ape today and what I think is about to happen and my thoughts and my opinions. But just remember that they're my thoughts and my opinions. I'm not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. But yeah, guys, in my opinion, what I'm looking at after reading the document that came out today about the ape offering or the dilution or whatever you want to call it. I've been having to read through it, and it's a lot of print, it's a lot of details, and it's gonna have to be a thing where I'm gonna have to read it a couple times. All right, today was the first day. As soon as it dropped this morning, right, I started digging into it and kind of processing what's going on. So let me point out first off, what I think is crazy is the volume today that we saw for Ape. It was 29.5 million, which is pretty damn high. And we were only up 10% at the peak and then down 5% for the day. So that's a pretty volatile move. And then for some reason, AMC was down 14.5% after this announcement for now, 42 million volume. So combined, I mean, you're talking about like 70 some million volume. So that's also a good sign, right? Saying there's interest coming in. A lot of it could have been short selling and so on from the volume, right? But that's not what I'm focusing on. I'm focusing on the document. I'm gonna give you information on the document and what I think is gonna happen. So yeah, thank you for the subscribers, the new subscribers. We got some new people in here. Thank you for joining the family. And I do my best to bring the receipts, to bring the truth, and to not try to spread FUD and just spread facts and details about what is really happening. Okay, so let's jump into this information. I don't want the video to be super long, so people understand what is happening. Cool. So I'm going to open this up. This is what I've been working on this morning. And I'm going to go over first the details on the Ape news, the AMC news, the offering news today that came out today. Okay, so first let's start off by saying, right, Ape, the share offering of up to 425 million shares, which this was the plan all along. We knew that Aron wanted to issue more shares to raise money, which in turn is good for the company. It secures their long-term, situation and their long-term existence. Remember, he's not here for the short squeeze because he's the CEO of the company. I doubt that he wants the stock to squeeze, and I'm going to touch on that a little bit later. But let's go over some of these details. So it can merge with AMC common shares with shareholder vote. So even though he does the offering, if he dilutes Ape in the next week or two or whatever, it doesn't mean that it's going to like merge with AMC right away. Okay, they would still need the shareholder vote no matter if Ape gets diluted. Okay, next, the third offering since December 2020. Okay, and I went back to the past. That's what all this is about, but let's focus on this. I went back to the past to see like what happens when these offerings go down. Okay, next, Citigroup Global Markets is the sales agent. They can sell at any given day moving forward, according to the details. And I'm wondering if this can have to do with the 43 million FTDs that are most likely, and it's not guaranteed, but I think what's going to happen is we're going to see a big run with Ape here in the next couple days and within the next week or so because of the 43 million FTDs that are technically due by Wednesday, I believe, right? By the T plus 35. If they did not cover those back then, if they just put a band-aid on it, like I said in my other videos, if they found like securities to cover with, then that's where they would have to be covered, the 43 million FTDs that Ape had on the 24th, August 24th, that single day. And then next, Ape, it does not have to sell Ape to retail investors. This is an offering, so there's a lot of rumors about Disney, there's a lot of rumors about this investor, that bank, whatever. They don't all have to be sold to retail. So you have to know that. It looks like it's going to be T plus one if they sell any Ape shares. Like if AMC sells any Ape shares, then it would be settled the next business day. The second business day is what I read in there. And I'm not going to go through the whole document. Like it's pretty long, and it has a lot of general, verbiage in there too. What happens with the overall market? So next, let's talk about. It talks about the risk for longs and shorts in the document, and it does not mean AMC will sell all 425 million at once. They can sell up to. They don't have to sell all of them at once, and I doubt they will. because Aron usually doesn't do that. He likes to hold, shares, as he says, in his war chest or his, toolbox or whatever, in order to raise capital. He likes to have that option, as we've seen in the past. The proceeds will be used to pay down debt. So this is like crucially important. Remember that there's going to be a lot of FUD about dilution and bad dilution, good dilution. There's going to be a lot of talk about that. But remember, at the end of the day, this is good for the company because they're trying to pay down debt. And it talks about a short squeeze potential in the document, the prospectus today. So we're going to go over that. So let's just first touch on that, how I got these numbers, this information. It's going to be from here. If you want, you can go to my Twitter, D's Daily DD, and I have this under my likes. So it's the actual document, the official document. Okay, we're gonna go here, and it's pretty long, but this is the offering, the details. So it says they can sell up to 425 million ape shares, and if they were to sell all of them at once, then the float would be 941 million. Sounds like a big number, but there's bigger companies out there that, like, Apple, Amazon, whatever. These big companies, they have like 2 billion, 5 billion, 10 billion shares. And honestly, right, this is just my opinion. It doesn't really matter what the float is because of naked short selling, because of the loopholes. In my opinion, right, the shorts always find a way to dilute the pool anyways, which affects the price. So I'm not necessarily like, oh my gosh, that's a huge number or whatever, right? So is that the market offering? And remember those words, at the market offering, that may be made from time to time through our sales agent Citigroup and their plan of distribution. They want to use the proceeds to pay down debt. Risk, it's talking about risk here, and then the symbol ape. I'm going to go down here, touch on this real quick. So this is the risk. The market prices and trading volume of our shares of Class A common stock, AMC preferred units, have experienced and may continue to experience extreme volatility, which could cause purchasers of AMC preferreds to incur substantial losses. So it's letting you know this is going to be a very volatile situation coming up soon. All right, I got to keep going down. Okay, let's pause there. Let's go back to my board. All right, here, what has happened in the past? Okay, because dilution and share offerings have been a big deal for AMC in the past, and now we're going to talk about this. So on December 11, 2020, that's when they made an announcement, and they secured $100 million with Mudrick Capital. Okay, they made an offering. By January 25th, 2021, they had been able to raise $917 million of fresh capital. And then on the 27th, they announced they completed the market offering. At the market offering, they completed it on the 27th. And remember what happened on the 28th. The price was out of control. They took away the buy button, right? The stock price shot up the next 2 days from the 25th. So let's go back, and I'm going to show you. I'm going to prove it to you. I'm getting this information straight from the AMC website. Remember right here. So they expect to receive 100 million of cash from Mudrick Capital. That was on the 11th, right? We're going to go to the chart. On the daily AMC chart, what happens, right? We have to see what happens when this stuff goes down. So we're looking at December 11th. That way you have information and know what to expect. But literally, the price, what happened today, right? So what happened on the 11th, next day, the price went down dramatically. And for like a week and a half to 2 weeks before it found the bottom and started making its way back up. All right, so this was the time period they made the announcement. Goes down. Next, let's go back here. The stock price, right? So on the 25th, they raised the money, and on the 27th, everything was complete of January. So now we go back to January 25th down, and it shows you the date down here in case you don't see it. But on the 25th, okay, they had completed the offering here, right? Completed. And what happened? Buying pressure came in, and the stock price shot up. All right, that's the first part. The next step, the next part I'm talking about is right here. The next offering is on April 27, 2021. They announced that they're doing a market offering. By the 13th, this completed the offering and they raised $428 million. On the 24th, it wasn't the next day or the next 2 days, but it took about a week and a half of trading days, right? And the stock price started moving up. AMC hit an all-time high on the 2nd, June 2nd, if you remember, if you've been in this thing. And then on June 3rd, they had completed that offering as well. So let's go back. Let's look at those dates. On the 27th, April 27th. Move a little bit along. April 27th, right here. What happened again? They announced it on the 27th and the price started going down, right? Because the shorts, they don't want AMC to raise capital, right? So they hit it hard. That's what I look at. That's what I'm thinking. By June 2nd, or sorry, the 13th is when they announced, right, that it was done and that they had raised money. We saw a little bounce and then it comes back down. And then guess what? Let's go look back at the date just to double check. So here on June 2nd, by June 3rd, they had completed the market offering. On the 2nd and the 3rd, June 2nd, and the price had already been moving. And on June 3rd, they had already announced that they had completed the offering and raised the money. All right. Zoom out. Remember, we denied the next offering and we have been going down ever since. All right. Just that's what the timeline is. That's what's been happening. That's just what's been going down, right? This whole time. And the price went down. The next dilution, we denied it. And then now here we are today, APE offering announcement on the 26th. All right. So my expectations is that it will be completed within 1 month. I'm giving this the time frame that the price will move within that time, and Aron is going to take advantage of that, and he's going to sell, raise money for the company. And in my opinion, this is like a good exit strategy for me personally. If I see a price I like, especially on APE, because I think APE is going to go first and then AMC, if I see a price I like, I'm going to sell. I'm letting you guys know now my expectations and my plan, all right, and how I see it. Do what you want to do with your money. If you want to hold forever, you can hold forever. But I got into this to make money. Next, once it's completed, I can see the price volatility come in. And this is not financial advice. But remember, once they announce the complete offering or within that time frame, right? That's why I'm saying a month. That's when you see the price go insane. Okay, so that's where I'm looking at for that. And that's where I got the numbers. And this is where we're at right now. Had an ugly day. So I'm going to expect AMC to come down and continue bouncing down, right? Before we start to see the reversal and the buying pressure reflect. And the good news when they say, right, AMC, oh, we completed the offering. We raised X amount of money. This helps us. It's good for the company because it helps them pay down debt, right? Nothing has changed. I mean, you're still looking at, they owe 44 million shares on APE. They owe 100 million on AMC. The cost to borrow is insanely high at 16.6%. And that's why I think this is about to go down, right? This is the second reason why, is because of this. The FTDs that have to be delivered, I don't think they were covered. And I think we're going to start to see some price movement, which is why they just hammered it down as much as they could, and so on, right? There's that. So yeah, that's just basically what I wanted to focus on. Oh, and the last part, I got to read this. All right. There has been significant dilution in our common stock, and there have been significant dilution of AMC preferred in the future, which could adversely affect the market price of shares in the Class A common stock and AMC preferred equities. The risk of future dilution must also be weighted against the risk of failing to be able to issue new shares in the future or equity, right, which could adversely affect the market price of shares of Class Common A and AMC preferred equity units. It's talking about the volume and what happened. But here, this is the paragraph I want to point out. A short squeeze due to a sudden increase in demand for shares of our Class A common stock that largely exceeds supply and or focused investor trading in anticipation of a potential short squeeze have led to may be currently leading to and could again lead to extreme price volatility in shares of our common A stock, and the price of AMC preferred equity units may also be subject to similar dynamics and volatility. Investors may purchase shares of our classic common stock and our AMC preferred units to hedge existing exposure to speculate on the price of Class A common stock and AMC preferred equity units. Speculation on the price of our Class A common stock and AMC preferred units may involve long and short exposures. This is where it's pointing out, right, the short squeeze potential. To the extent aggregate short exposure exceeds the number of shares of our Class A common stock and RMC preferred equity units available for purchase on the open market, investors with short exposure may have to pay a premium to repurchase shares of our Class A common stock or AMC units for delivery to lenders of our Class A common stock preferred. Those repurchases may in turn dramatically increase the price of shares of our Class A common stock and AMC preferred equity units until additional shares of our Class A common stock and or preferred AMC units are available for trading or borrowing. This is often referred to as a short squeeze. A large proportion of our Class A common stock has been in the past and may be traded in the future by short sellers, which may increase the likelihood that our Class A common stock units will be the target of a short squeeze, and there will be widespread speculation that the trading price of the common stock has been from time to time a result of a short squeeze. A short squeeze and our focused investor trading in anticipation of a short squeeze have led to, maybe currently leading to, and could again lead to volatile price movements. Class A common stock and may have a similar impact on the price of the units that may be unrelented or disproportionate to our operating performance prospects, right? Saying like might not match the fundamentals there. And once investors repurchase the shares of our Class A common stock necessary to cover the short position, or if investors no longer believe a short squeeze is viable, the price of our Class A common stock and AMC preferred may rapidly decline. Investors that purchase shares of our Class A common stock, AMC preferred equity units during a short squeeze may lose a significant portion of their investment. Under the circumstances, we caution you against investing in our AMC preferred units unless you are prepared to incur risk of losing all or substantial portion of your investment. And this is the part where they know, right, that maybe the apes will not be here forever. That's why they're putting this in the print. The AMC units are listed under the ticker symbol APE. APE is also the name by which some of our retail stockholders refer to themselves. There is no guarantee that these stockholders will continue to support AMC in the future, and negative sentiment among AMC's retail shareholder base in the future could have a material adverse impact on the market and prices of Class A common stock and the APE units and your investment therein. All right, guys, so that's what I think is important for today. There's some good information in here, but like I said, I'm going to have to reread it because it is a lot, but I wanted to bring to you the important things and where I'm at with my thoughts and my position and my play, right? I'm holding right now, and you got to do what you got to do. That's what's best for you. But I can see some heavy volatility coming in, and I have the facts, the receipts on the data on why I'm going to be looking for this and why I think what's about to happen. Okay. So as always, thanks for tuning in. I hope to catch you in the next video. Peace out.